Okay, so today what I want to talk about is the housing market. And I'll talk about the US housing market, but also the Canadian housing market, because the Canadian housing market is the one that's been, going through this huge, huge bull market lately. And, I could start off with the US market. And now the US housing prices after 2008 crashed pretty hard. Now, they didn't completely get clobbered because the Fed was buying up so many of these mortgage-backed securities that it still kept housing prices at a reasonable level. But they were still quite, uh, reasonably low. They weren't nearly as high as, well, they still aren't today nearly as highly valued as, let's say, US stocks are or US bonds are. And so the housing market in the United States, I mean, it's been growing a lot this year. It's had a lot of growth this year, but it's still one of the relatively uh, less overvalued sectors, I guess. And it's not one of those super expensive things, but in Canada, and that's what I want to talk about right now. In Canada, that's a completely different story. Um, if you look at the growth, let's say the population growth in Canada, it's about 1.4% a year. And you need a population growth of 2 for your population to not be decreasing. And so Canada's population is not really increasing. Now, at the same time, the housing prices are flying. They're going basically to the moon. And over the last couple of years, the housing prices in Canada have went up around 10%. Now, 10% is, I mean, if for stocks, it's not incredibly high. It's a pretty reasonable target. But houses aren't stocks. Houses are not usually an income producing asset. Now, unless if you're renting it out for commercial or residential real estate, you're not going to be making any cash flow on it. You're not going to be making any income off of your house. In fact, you're going to be losing money, right? You're going to have to be paying all these taxes on your property, and you're going to have to be paying all these additional fees that come with repairing your house and whatever like that. So a house is actually just a negative cash flow producing asset, and that's why if you read the book, I think it's Rich Dad Poor Dad, and that's like one of the classics. But the author Robert Kiyosaki says that your house is not an asset; it's a liability. Now, I don't agree with that statement. I don't think it makes any sense. But it's not a productive asset. It's not a cash flow producing asset. And so I kind of get where he's coming from, but I don't think he's wording it very well. And so growth in house prices at 10% a year is just crazy. It's not anything reasonable, especially when you have a population growth of 1.4%. You have a GDP growth that's not very high, and so you shouldn't be getting all these crazy housing prices. And unlike the United States and Canada, during the US housing boom that ended in 2008, you didn't really get that much of a housing boom in Canada. The Canadian stock market did really well, but the Canadian houses didn't do that well. I mean, they went up, but not anything close to how the US houses went up. And that's kind of the reverse situation with the United States and Canada today. Canadian house todays are flying up at incredibly unreasonable levels. Let's say you go to Toronto and you buy one of these little houses here. Just any one of these houses. It's just a small little house, even an apartment. It's probably going to cost you $700,000, a million. You know, a small house, a million, 2 million. You know, they're not big places, but they cost an incredible amount. And of course, nowadays it's hard to buy a new house. You're going to have to be taking up such a large mortgage. That's kind of the situation you have in China, except the Chinese housing bubble just apparently never pops. And it probably will someday, even with government policies trying to prevent that. But you don't know what's going to happen and when it's going to happen. But you eventually reach a point where nobody can afford to buy a house. And what ends up happening is you have to live in the houses of your parents, and then they pass down their houses, and then you pass down your house to your children, and then you sell their house to maybe buy a new house and to change up your houses. And so you're not actually buying new houses. You have the same amount of homes, except you're kind of just moving from one home to another. And the thing with China is they're getting some foreigners going in there and buying their houses. And of course, everybody just thinks that the housing prices are going to keep on going up. And so nobody bothers to sell. And in Canada, you kind of have the same thing, especially with such low interest rates. Nowadays, everybody's going to the banks, taking on a mortgage, getting a new house. Houses are doing well, and so they're going to go back and buy more houses. And I mean, are there that many people renting these houses? I don't know, because if you look at the population growth in Canada, it doesn't seem like there's that big of an increase in population. And it's not like nowadays everybody wants to buy more houses, because the GDP growth is not, it's not that substantial either. And so what we're seeing in Canadian housing, it really resembles the housing boom that we've had in the United States in 2008. Now, even a big Canadian bank, CIBC, I think it was, came out and criticized the Bank of Canada for blowing this huge housing bubble and keeping interest rates so low. And usually you don't see that, because these guys are all kind of like teammates, and they're all kind of they're basically kind of just aligned with each other and make decisions together. It's kind of like this. But I mean, I guess the banks do kind of benefit from having higher interest rates, because they get to make loans at a higher rate. And so if banks are just going to make mortgage loans at 3%, which is kind of the rate now, if they're going to keep on doing that, 30-year mortgages at 3%, they're not going to be making much money, especially when the rate of inflation is around 2%. And so, of course, the banks probably want higher interest rates. And I guess that would be a fair reason to, criticize the Central Bank of Canada here. But I mean, nonetheless, they're not wrong. I mean, if you look at the just unreasonable growth in the prices of houses to the point where nobody can afford them, and you look at where interest rates are, and you look at where interest rates are going, and so the Bank of Canada says that the interest rates will not be raised until like 2023. I mean, that's 2 years from now. And that's 2 years of maybe even more housing price growth. And so now even less people are going to be able to afford to buy houses. And house prices might keep on going up, or they might come crashing down before 2023. Although, I mean, in such a low interest rate environment, you don't really know what's going to happen, and housing prices could keep on going up. Uh, because but when once the rates come up, well, even less people are going to be able to afford to buy the houses. And so you have this really big problem. And the question is, well, what happens when the price of houses come down? What happens when the long-term interest rates start to go up? And if you look at the yield on treasuries, especially the long-term treasuries, the 10 years, the 30 years, those are big factors in determining the rates in the mortgages, because they're pretty good competitors of each other, I guess you could say. And so what you end up having is really low long-term interest rates, but now they're starting to rise. And what happens when they go even higher? Well, maybe the central banks are going to come back and start buying long-term treasuries again. They might do their yield curve control, which is basically they set up a rate they want the treasuries to be at, and they'll buy however many treasuries they need to buy in order to get the treasury down to whatever rate they want it to be. And so let's say I want the yield on the 10-year to be 1%. Well, I might buy a billion or 10 billion or 100 billion or whatever number worth of 10-year treasuries, and I'll buy so many of them that the rates on the treasuries go to 1%. And if I want to do QT, which is tightening, and well, I guess you would still call it yield curve control, and you want the yields to go up, well, then you'll just start selling all these treasuries, and you'll have so many treasuries that the yields will start to rise. And if we have that all the way until 2023, we could probably delay a housing bust, but eventually it's going to come down regardless. Eventually it's going to happen. And the thing with housing is that the housing market doesn't come down instantly. It's not like the stock market in March that just comes crashing down in 1 or 2 months. The housing market is very different. And the housing market, it has a very slow fall that lasts over quite a long period of time. And so if you look at Japan, when they had their huge housing bust, it was a long, very, very long period of stagnation. And I mean, I don't know what we're going to get with houses. They're definitely overvalued today. And I mean, I could see them going higher in the short term. But you also have a few places in Canada where the housing prices are not incredibly high. For example, I looked at Alberta, and I don't know if everybody knows where Alberta is, but it's a city that has a lot of oil. Back in 2011, 2012, everybody was going to Alberta because Alberta had all the oil, and everybody wanted the oil. And so everybody went to Alberta, bought houses, and some people made a lot of money, and others who got in late lost a ton of money. And the prices of the houses in Alberta was higher than Toronto, was higher than Vancouver, is probably as high as New York, like Manhattan. The housing prices were ridiculous back then, and people just wanted to go in and get oil. And so what you had was a very, I guess, quick housing boom fueled by commodities. And then once 2014 came, the price of oil started to collapse. The price of housing started to collapse as well. And you haven't had a really good increase in the price of Alberta homes ever since. And so now Alberta homes are actually not quite well. They're not. I wouldn't say they're overvalued, especially relative to Canadian homes. The price of the homes in Alberta sits kind of near to the American home price range. And I'm not talking about American homes in California, in Hollywood or in Manhattan. I'm talking about just a normal state um, with houses that are quite normal, like Florida, for example. The house prices there are not they're not unreasonable at all. They're very reasonable, and it's a pretty nice city. Um, so American homes are not uh, overvalued compared to Canadian homes. And Alberta, the price of Alberta homes seems kind of similar to the price of American homes. And you have uh, a potential benefit for Alberta if the price of oil starts climbing up again. Now, the price of oil, what we've had is the price of oil in March just collapse. Sometime in the recession last year, the price of oil dropped to negative like $37 a barrel. And that must be terrible for Alberta homes because the economy in Alberta heavily relies on oil. And so, I mean, at that time, it probably dropped. Now, again, real estate is not too volatile. So it's not like a quick, sharp drop. But, you probably had some type of drop. And the price of oil now is, I think, just under 60. And so right now, 60 is a pretty reasonable price for oil. It's not high at all. And I think oil could go even higher. I think oil could easily go even higher. Now, I don't know about the long-term prospects of oil, like, 50 years from now. I don't know if we're still going to use it. Maybe we're going to have electric vehicles and electric planes. Who knows? And oil might not have such a high demand anymore. Uh, Now, that might not mean the price would go down because nobody's going to mine oil for a negative profit. So the price of actual oil might not go down, but the overall market for oil is going to crash, and you're going to have much less oil companies in business, and a lot of the oil companies are going to go bust if oil is no longer needed in let's say 50, 30 years. But I don't think the price of a barrel of oil is going to change too much just because no one's going to mine oil anymore if your cost of mining a barrel of oil is higher than the price of oil. And I was looking at the uranium sector, and that's kind of what you have right now. You have um, the price of uranium, and you have the cost and the cash cost, not counting like the factory build, the building the plants and and the prior costs. I'm talking about the cash cost of mining a pound of uranium, and that cost is actually higher than the price. And so you have this kind of situation where you're going to have a lot of companies start to shut down. And when you have these companies shut down, well, the price is of the metal that they're mining is going to go up, and then they'll go back in business once the price goes up, as long as there's a need for whatever they're mining. And for oil, um, if you're expecting inflation, oil does well, energy does well. If you are expecting economic growth, if you think we're entering the 1920s, I don't know why you think that, but if you think that, then energy usually does quite well. And so Alberta, I think, the houses there have quite a bit of space to go, uh, at least in the longer term, maybe 5-10 years, because the Canadian housing market in general is overvalued. And a lot of people I know are like, yo, we got to go into the Canadian housing market. We got to buy up more homes. Houses are doing so well. And so we got to buy more. I don't think it's a good idea. I think it's kind of the same with GameStop. And, talking about GameStop, talking about all these bubbles, I read an article today, and it was about the guy who bought $69 million worth of NFTs. Now, I don't know why he paid $69 million for it. I don't know if it's a meme or something. That guy's probably really wealthy, because I'm pretty sure the price of NFTs in general have gone down by like 70% or something. And that's just in less than a month. I mean, that's, in a few weeks period. Uh, so, and I don't think they're going back up again. And the best part about it is that the guy who bought NFTs basically said that investing in crypto or investing in Bitcoin or something like that, is as crazy as buying NFTs. Now, I don't know why he wasted $69 million on an NFT. I mean, he could have just gave it to me. I mean, I would I would love having $69 million. Or he could have even gave half of it to me. I mean, I'd be very happy anyways. But he spent it on an NFT, and I don't know if he regrets it or not. But I guess he realized that it was a pretty stupid decision, and maybe he purposely made that choice. I don't know, but that's just a warning to all of these crypto investors, I guess, that if NFT doesn't work, and all these people are saying NFTs are going to be the next big thing, NFTs are going to the moon, NFTs are here to stay forever, and maybe they are here to stay forever. I don't know, but they may not be worth much money in the next 5 years. Maybe they're here to stay, but if they're trading for pennies, if what you bought for 69 million is now worth $10, I mean, does it really matter if it's here to stay? It's as good as if it's gone. And for stuff like Bitcoin, for cryptocurrencies, that might be a problem that you're going to have to face as well, especially once the bubble in the economy starts to pop. And so you might have to watch out if you're invested in Bitcoin and Ethereum and Dogecoin. I don't know. I don't know about I mean, I don't know who are the people who are buying Dogecoin. I think it's probably like the Elon Musk followers. But I really have no idea. I don't know if they want to buy Dogecoin to to get rich or just to make a statement or to, try to be funny. I don't know, but it's not a great place to store your money for sure. And so the point of this video, I think you should kind of stay away from Canadian houses and also kind of stay away from crypto. And I would argue that it's better to stay away from crypto than it is to stay away from Canadian homes. It's more important to stay away from crypto than Canadian homes, although staying away from both would make a lot of sense. Anyways,